Hey, you can see me?
Yeah.
Okay.
As we progress along. And let's start off. So today we're going to have Matt Pixa give us his economic presentation, which should be really interesting. He gave us a little bit of a preview a few days ago. But before we get started, I would like to, there's a few announcements that we want to make. We'll start off, let's see, Felicia's not here. How about, we'll start with Deb. Share with us a little bit about what she has going on that everyone, I think, can benefit.
Okay, hi everyone. Just wanted to real quickly, a lot of you have seen things going around about Hold Fast Seal Beach and what is all this. So Rob wanted me to just take a minute. The Seal Beach city staff and council wanted to do something to help our local businesses come back kind of following the COVID-19 shutdown. And city council voted in June to find a local Seal Beach-based marketing company to promote and expand awareness of Seal Beach businesses and drive return and new business growth as well. So proposals were requested and my company was selected. And after working with city staff, the chamber, and the SBPD, Hold Fast Seal Beach was born. Hold fast is a nautical term meaning to bear down, fight through the storm, which is exactly what all of our local small businesses have been doing since March. We have signs, banners, posters all over town, even on bus stop shelters. An email campaign has gone out about 3 times. Landing page on the city website, so check that out. A great video showing familiar faces and places around town. And check us out on Facebook at 4 words, Hold Fast Seal Beach. And also on Instagram, 1 word, Hold Fast SB. And please help us by linking and by liking, and following the Hold Fast Seal Beach page on both Facebook and Instagram. We encourage everyone to eat, shop, and support local small businesses wherever possible and whenever possible. And while you're there, do us a favor, help the business further by spreading the word. Snap a photo, post it on Facebook and Instagram, or either one, tagging the business and using hashtag HoldFastSB. Your name will then be entered into a weekly contest for $50 gift card to Seal Beach businesses, and that'll happen through November 15th.
Doggone technology. Okay, I was muted. Thank you, Deb. And that's really good because it's the whole program is designed to promote businesses, which of course the chamber likes to help out, and happy to oblige. Also, Rosie, do you have an announcement with your Halloween event?
I do. So as we've all tried to struggle through these COVID times, American Beachside, myself, and the Sun newspaper teamed up to do the spectacular Halloween yard decorating contest. And we're super excited because we've got quite a few candidates wanting to compete for the yard decorating contest. And it's going to be a great event. We're going to have 10 judges that are going to circle around the homes that participate. It's $20 to buy a sign. And with that money, we're going to be buying gift certificates to locals and giving them out as prizes. So we're super excited. There's a lot of buzz out there about it. We're getting phone calls every day. And if you want to participate in the Halloween yard decorating contest, I invite you to do it. It's going to be a fun event.
Great. Thank you, Rosie. And then we have a guest here from the Lions, Scott Weir. And so Scott, why don't you tell us what you Lions have going on?
Let's see if I can get unmuted. Oh, there we go. Thank you for having me part of this, Rob, and all of the chamber. I really appreciate it. We We just came up with a very fun, simple contest. It's a pumpkin decorating contest sponsored by the Seal Beach Lions. No cost to enter, no contact. So basically, take a photo of the artist with the pumpkin and email it to president@sealbeachlions.org. And then we will have some cash prizes for the winners, and there's some categories. I will be coming by with a flyer to the businesses to see if they can put it. We put together a long. Oh, okay. You guys still hear me?
Yeah.
Okay, and then so that's basically it. Should be a lot of fun. Again, it's a simple contest, no contact, and it's free, and it should be a lot of fun. We just try and promote some artists out there among our community with the children. So children only. So ages 5 to 8, 9 to 12, and then a 13 to 16 category. So you can have it painted or carved.
Okay. Thank you, Scott.
Thanks so much.
And then I have two other announcements to make. Is that the city has been working with the schools in the area and a daycare center for a Halloween giveaway bags, and the school district has approved it. And so instead of the kids going trick or treat knocking on the doors, which is considered a high risk activity, what this would be is they're putting together these bags that can be distributed to the kids at daycare or at the schools. And so the city is and Manny through Republic is helping out. So thanks, Manny. And but they're looking for help. If anybody wants to help to distribute, or if anybody, I believe they're also looking if people want to contribute to anything in the bag. Please let, I guess to contact, contact me, president@sealbeachchamber.org. Mackenzie's not feeling so well right now. And then we'll put you in contact with Les Johnson at the city, or you can just contact him directly. And they're gonna they're gonna deliver the bags on the 23rd, so it's coming up pretty close. It's not gonna be on Halloween Day. The other thing that I wanted to tell you guys about is that we're gonna be doing an EDGE series meeting, or it's gonna be a panel discussion coming up on October 22nd at 9 a.m. What we're gonna be talking about at this EDGE series, just so you know, it's our educational series, part of the chamber that we're starting up again. And this, in a sense, this economic discussion or presentation, actually you could kind of consider as almost a part of this. But the panel discussion that we're having are going to be businesses that can share what they did to kind of pivot things with COVID going on. Because right now, with the way things are going and the way things have been changing and continue to change, that it's all about learning how to navigate through this. And hopefully just hearing their stories maybe can inspire you to rethink perhaps what you're doing right now to help your business. And so we're offering that for our members. And so again, that's going to be on October 22nd at 9 a.m. Now we're just putting this together. I'm still confirming to make sure that it'll work with our panelists, but we're looking to do the October 22nd. We'll send out a notice early next week. With that, those are all the announcements for the Seal Beach Chamber. So we're going to launch now to Matt with his presentation. Matt Pixa.
Good morning. How are y'all doing? So I need to share my screen, correct?
Yes.
Can you all see?
Yes.
Not yet. There we go.
Everybody looking at the same thing, I hope?
Yep. Looks
Very good.
perfect, Matt.
Awesome. So we'll kick off here, and in the interest of time, I'll do a brief introduction, and then one thing with the topic of economics, you know, I can put some people to sleep. Maybe not Brian Harmon, who's a bona fide economist and actually taught the discipline for years, but I want to keep it high level and then dig down at the end towards kind of some Seal Beach stuff as well as answer questions. But by way of a quick introduction, so my name again is Matt Pixa. I'm what's called a registered investment advisor, and I have my own firm called My Portfolio Guide. We're right here in Seal Beach. And I've been doing this just a little over 20 years. And actually with this particular firm that I started just 10 years ago, we were going to have a big 10-year anniversary kind of celebration, but for obvious reasons that got put on hold. But we'll figure out a way to redo it. So I'll dive right in here. And throughout the presentation, if you have a question, feel free to kind of maybe note it down, and then I'll do my best to really address everything at the end and try to tackle any questions you all have. So just a quick little background on me. I think it's important to kind of know, you know, not every single book I've read, but also kind of what I've done all the way through. So it's funny, you know, I have a freshman, my daughter's a freshman in college, and, you know, all her roommates have already changed their major twice. They're just 2 months in. I started as an accounting major, thinking everyone's always going to need to keep the books, and that's always going to be an industry that's around. But I quickly changed, and maybe that's because I met a really brilliant professor at one point or just got hooked into the topic. The economy is always interesting, so I chose to major in it, and I'm really glad I did. You know, and I did that at Long Beach State. And then, you know, to round out my business skill set, if you will, I ended up getting an MBA at Arizona State. Not that I needed one, but it really taught me other parts of business and just, you know, the world in general. But one thing I wanted to point out is I'm a big fan of being a lifelong learner. So part of the thing I enjoy most about this topic is it's always changing. And also, you don't have the answers. There's always something that's changing and dynamic. And the other thing is there's an opinion, there's no lack of opinion, I should say, with the topic of economics. So that being said, I went back to get my CFP, Certified Financial Planner, credentials, and I did that through the personal financial planning at UCLA. Sorry for those Trojan fans out there, but that's what I've done. And then throughout the years, I'm part of this organization here, which is the Financial Planning Association, which also puts on quite a bit of education and good things for people that are in the industry as well as you know, consumers, as we all are. So again, this is what I do on my day job, and I'll just dig right into our topic. So one of the things I love doing is not necessarily making fun of everybody in this field, but economists really have, you know, they have track records, right? You can see everything that he or she says, but they also have a little mulligan. They can always change their opinion on things, adjust, and so forth. But a lot of them, I don't want to broad brush the entire sector of people that do this for a living, but a lot of them are doom and gloom. And it's almost like a broken clock. You know, it's going to be right at least once a day. And this is one of my favorite jokes. And again, accounting jokes and economic jokes sometimes don't hit on everyone's funny bone, but this is something where it's so true. Economists have predicted 9 of the last 5 recessions. And the reason why I bring this up is, in particular, we just went through a stretch prior to the whole pandemic of an economy that was just really humming along. And, you know, there were a couple blips here and there, and I'll get into some of those today. But for the most part, if you were just in the market, open for business, things were good. There's always a dissenting opinion as to, well, something's coming, there's going to be some event, and I'll talk about that a little bit today as well. So the idea of today's topic, without getting into really, you know, digging into the weeds, is I want to take it from kind of what's happened in 2020, which has been one for the ages, a year that we'll never forget, and then digging a little more micro into Seal Beach itself here. So I'm using the word unprecedented because if you haven't heard that word or the word pivot, you're going to hear it every single day. This is so unusual. We've never seen this before. And for anyone who's studied economics, there's something called the black swan. You know, something that if I told you, hey, rates are going to increase in the next year or two, that's not really that much of an economic revelation. Some things are just seriously written on the wall, very well telegraphed. A black swan is something that comes out of nowhere, something nobody expected. They come in all sorts of, flavors, if you will. So you've got things that are, whether they be political tension, some sort of war that comes out of nowhere, 9/11, and this year, the doozy of all doozies, something that really shut down not just California, not just Seal Beach, the entire globe. So clearly, I'm using this as partly something to talk about as well. My crystal ball here, everybody's crystal ball got shattered. And I'm not going to make it all doom and gloom, but I'm just going to go over kind of the stuff that has happened and what we will see going forward if my crystal ball is any good. So real quick, this is kind of a choppy chart here, but if you've ever heard someone say, we are in a bubble, whatever X is, it doesn't matter what area they're looking at. In this particular one, I pulled this up a couple of years ago when everybody was asking me, hey, should I buy Bitcoin? What do you think? And, I always say this, if anyone has kids, if you can't explain it to your kid, don't put your retirement into it. But I had pulled this chart up and I've kept it for years because there's always some sort of bubble that's just kind of percolating and getting ready to get going here and pop eventually. Some of them are obvious, and they're always obvious once they're done. Once the bubble has burst, you got your armchair quarterback Monday morning saying, I told you so, this is what I've been talking about for years. But ironically enough, most bubbles, you don't know it until it's really popped. Tech bubble, everyone, if you see that one, the late 90s all the way to the dot-com bust, that was one that's pretty well top of mind. Are we in a bubble now? Were we in one? And, there's arguments for and against that. And they've been around forever. The most famous one is the tulip mania way back in the 1600s. So I'm going to get into kind of what is overvalued in the economy and also some areas that maybe not so obvious that seem appealing because they're not in a proverbial bubble, but perhaps they are. So here's a quick slide. I'm not going to dig into each one of these numbers, but I want to bring out one major thing. Why am I bringing up 2018? So here's the story behind that. I think in 2018, we saw the first taste of kind of the weaknesses of the financial markets. I'm always someone who says that humans in general have short memories. You might remember some really unimportant things, but you certainly can forget certain things quickly as it relates to the markets, and then you drive by emotions. And this is something where I'm just going to point to on the right column. At this time, that's not how the year ended. This is what I printed up right around Christmas Eve when the market woke up and Santa Claus gave us all a lump of coal that morning. The market was down 700 points just in one morning. That actually seems kind of mild compared to what we just saw in 2020. 700 points is just nothing almost anymore. And I hate to say that, but that's the case. But that morning, the market just woke up in a bad mood, China tensions, all this stuff. But the reason why I'm bringing it up is a couple of things. So first off, to the left column here, these are just basic asset classes. So I'm not going to try to, do some investment jargon. And if you don't know what these are, I'll just be brief here. But, large company stocks, S&P 500, Dow Jones, things like that. Mid-sized companies, small-sized companies, international, developed markets, emerging markets, and then real estate and bonds. So for one, and I won't dig into portfolio stuff, but you should have a little bit of everything, as they say, to diversify. Bonds were your safe haven during this time, but they too finished the year flat to down. But what I want to bring up is the definition of a bull and a bear market. So a lot of people don't realize that, what they are. And we went through a stretch of almost 10 years without a bear market. A bear market, by definition, is down 20% or more. And even up till 2018, when it finished and we went into 2019, we still had not had a bear market. And I totally disagree with that. We just didn't have it in large cap stocks right up here. So in 1 month, in December, at one point, we actually went worse than this, but at this snapshot, we were down 10%. And that was just over a couple of weeks. Mind you, this is following a year that was the least volatile on record, and that was 2017. If you go back in the history books and look at all those charts, 2017 was almost like Groundhog Day. I wrote an article on this. You wake up, didn't matter what happened, didn't matter what Trump was tweeting, didn't matter what was happening in North Korea. It was just steady Eddie all the way up. Staircase kind of climbed to the top. A lot of people were talking about the bubble then, but this is what happened in December. Everything just absolutely started crumbling. And we all saw the reason for it. You know, there were issues with this massive trade war that was going to happen, and other stuff too, which I'll dig into later. But point being, parts of the market, namely small and mid-sized companies, were already hitting that magic minus 20%. So this was, in my opinion, kind of the first little taste of what was to come. And it had nothing to do with coronavirus, just had to do with the fact that markets can go down in a heartbeat. Now, this bottom chart here discusses, well, what happens from peak to trough when you've had some real doozies? And let's just start with the top one, the Great Depression, where you saw a max drawdown, again, from peak to trough of down almost 90%. And I get this question sometimes from some, you know, maybe a brand new client will come aboard and say, well, gosh, you know, can the market ever go to zero? And the answer is, well, it never has. Could it? You know what? You'd have a lot more concern if the market went down to zero than just your portfolio. You know, you'd be looking for food, you'd be looking for shelter. But the point of this chart, and this is for, you know, a lot of advisors, their whole thing is just to try to keep people from jumping out the building and keeping them calm. The idea here is eventually markets recover, and they do so rather quickly. It's not every time you see a V-shaped recovery like we're seeing right now. And I could argue that that one was a little bit, you know, fabricated, if you will. The Fed printed so many trillions of dollars. You know, I'd be hard pressed to kind of tell you how to spell out that many zeros. But here's the story. Over the course of time, markets do come back. This one from peak to trough actually went down lower than that. It was down almost 38% at one point. But it was even worse in other areas. This is just large US stocks. So, you know, companies that you think about and hear about every day, the Apples, the Microsofts of the world, GE, Intel, et cetera. But small company stocks were down even worse. So I'm not going to start slamming you guys with numbers and so forth, but before I dig into some of them, and I'll make it fairly topical, I just want to talk about how long do markets stay down, and also how frequently does that happen. So my little box right here in the lower right corner, market turbulence happens daily. Market corrections and actual pullbacks and bear markets happen a lot more than you might think. So again, a little definition, we already talked about what happens when a market goes down 20% or more. That's a bona fide bear market. And then what happens when you have what's called a correction, that's usually your 10% down or more. It happens about once a year. And that's kind of mind-boggling for people that don't think it's quite as volatile as it is. Now, market turbulence, pullbacks as they call them, smaller corrections, those happen all the time. And lately, they happen almost weekly. So, you know, 5% or more, that happens 3 times on the average. There was a stretch in March and April where it was literally, we would wake up, it'd be down 7%, 9%, market would actually be paused for you know, to try to mitigate some of that insane volatility. So going back here, I'm going to start with the boring stuff. If you haven't refinanced lately, money is dirt cheap, it's free. And you know, the Fed funds rate here at 0.025, it's going to stay that way. That's one thing that you don't need to be an economist to tell anyone else that you know, banks right now are giving you 0.0 nothing. But if you have a mortgage out there that's north of 4 or 5%, you know, this is an opportunity that we may not see for a long time. Now it could go down, who knows? LIBOR, by the way, that's a London interbank offering rate. That's going to be scrapped at the end of 2021. But a lot of things have changed. By the way, the bond market is far more massive and intricate than the stock market. But when you turn on the tube every night, you hardly ever hear about the bond market. This is an area that's typically a little safer. I'd argue that might change with rates on the rise. That's one thing that is on the wall. Writing on the wall is rates will go up. But this is what bonds have done year to date. kind of a steady Eddie deal. I will say this though, in March and April, there was absolutely nowhere place to hide. I mean, you name it. Real estate, gold, stocks, of course, got decimated. The only thing that was there was really cash, earning nothing. So now I'm going to dig into real quick. If you peek under the hood of the market, a lot of this, if you just turn on the tube and just kind of say, oh, wow, market came right back. It did, but it didn't. The S&P 500, which is, largest 500 stocks in America. Here we are. This is pulled up as of Monday. So we're finally above break even after being down literally over 30% at one point in the shortest time in history, mind you. But here's the real story behind that. It's all been driven mainly by large cap tech. And I'm talking, when I say large, I mean mega cap tech. We're talking, Amazons of the world, Google, Apple. These are all the names that buoy the market. They've been carrying the weight of the broad market. There's the 80-20 rule out there where 20% of the people or on a team do 80% of the work. LeBron James tonight is 20% of the Lakers, but you could argue he does more than 20% of the work. So here's the story though. If you look at small cap value, we're still in bear market territory. And this is kind of the story, and we'll dig down to what Seal Beach is feeling and local economies. But, if you own a business in town, some are flourishing, and we'll talk about that, but others are really still way down and perhaps out for good. I forget, I read the other day, I want to say it was 1 in 4 restaurants will never come back. I mean, that is really hard to see, and it's heartbreaking. But as it relates to the economy and stocks, yes, things do come back, but some do not come back at the same pace, and we're seeing that right now. So here's a little deeper dive into the sector performance. And what we're seeing here is the most massive disparity that I personally have ever seen. I've been doing this 24 years, and you've got some energy stocks that are still down, even with the quote unquote recovery, still down almost 50%. And then you flip it around, you got tech stocks that are just absolutely on fire. They took a break in September. Even our friend Apple here was down 22% in 1 month, but it's still Apple and it's still doing okay. But here's the point. You're seeing quite a difference in the top and the bottom sectors, and you got a couple that are hitting singles here. And I promise to not be Mr. Doom and Gloom. I'm going to talk about later on, there are sectors to look at that may do well should we have a change in administration. Believe it or not, I'm going to bring up, maybe I won't bring up religion today, but I will bring up politics. We just came off 2 debates, VP debates last night. That will be something that nobody can ignore. There will be a change. There will be some nervousness, but there also will be some sectors that will benefit differently if we have the incumbent stay versus a new administration. So here I wanted to bring up something with economic cycles. And there's basically 4. You've got an expansion phase, a peak phase, contraction, and then the bottom here, the trough, right? And what happens is they each go through this and they keep doing it. And ideally you see the line continuously go up over time. That's what's happened for, 100 years. But here's the story with another word, and I'm going to bring it up, is it's not the economy, but it's emotions. At each part of these different, peak to trough rotations here, you're going to have massive emotions, and people make decisions at those different points in time. So during the phase of economic growth, you're going to see this is the expansion phase. You're going to see strong economic growth, and then it kind of flattens out up top right here. This is not when you think you should do anything different, but it is. And then obviously this is when you see massive recession. Incidentally, the definition of a recession has changed, it seems, over the years. When I was studying way back when, an economy that was in recession was defined by 2 consecutive quarters of negative GDP. Well, we technically, in Q1, right towards when the pandemic started kind of percolating, we saw, minus 5% GDP. And then Q2, boy, right there alone, you saw it went down over 30%, 31.7 to be precise. And now it's come back 29.8. Are we out of the recession? I think not, and not even close. So some things are definitely humming along, but where are we in this cycle? And this is what I want to talk about as it relates to emotions. So here's the same kind of cycle, but with emotions. And all of us have something in common. We're all consumers. If you've ever invested in a stock or in a mutual fund or whichever, you're going to feel one, if not all, these emotions throughout the whole cycle. And I'd ask you right now, as you look at this chart, kind of where do you think we are right now? My point is, if it's these two right here, point of maximum financial risk where there's massive euphoria versus the opposite, point of maximum opportunity where you're absolutely throwing in the towel, total depression sinking in, you just don't want to go outside. These are the 2 points where we all as humans have something in common. Doesn't matter what you do, but we're emotional creatures. So at these inflection points, you make massive decisions. People up here, you know what? I'm going to buy Bitcoin. I'm going to buy, Tesla that still hasn't earned money. I'm going to buy something I don't know anything about. 1999, I'm going to buy eToys. 2 months later, they're out of business because they don't have a business plan. Then down here, I'm not going to buy Amazon that's got cut 30%. I always say this about the stock market, but it's the most interesting store in the world. When there's a 30% sale, everybody runs for the door. And that's the exit door. They don't go in and hit the racks and kind of look and see, whoa, gosh, I wanted to buy this. They don't do that. They do the opposite. They throw in the towel, and this is kind of what you see right here, this panic and capitulation. But it's the only store in the world where when there's a 30% sale, you don't buy. And that's, it's easy to say that now, but that's when you should. Last thing on that, as far as what you should do, should not do. The point of part of this is, we as consumers, whether you're an economist, a financial advisor, or any other type of business owner, as a consumer, we have our eyes open. But I always say this, the rear view mirror is always so much more clear than the windshield. It's so easy to see what just happened and say, yep, I knew it. I should have done that. Or, gosh, what a dumb. It's really hard. Nobody has a crystal ball, but the windshield is definitely fuzzier than the rear view mirror. So last topic on the piece of behavior and kind of what drives us to make decisions, whether they be good or bad. It's often driven by emotions. Right now, you're going to head into, forget the political kind of election circus that we're seeing. You're going to see, and I apologize for a little bit of a fuzzy chart here. I've been using this for literally years, and it's always there for me. It always gets updated because in this day of, there's no lack of information, Twitter, Facebook, all this stuff, not to mention regular media channels, they are trying to get you information. But is it factual or is it emotionally driven? And I'd argue it's the latter. So right now, you're going to see these charts all the time. This is one where they took the Dow Jones right during the Great Depression, when we saw, again, peak to trough, we saw 86, 87% drawdown. And they're going to show you a chart of the market right now. And you're thinking, oh my word, that's exactly what it's doing. So therefore I should sell. And this is complete hogwash. This is a bunch of, really, you can make any chart, paint a picture, whatever you want to have as your narrative. And I'm not saying things are just fine and rosy out there. It's just, the fact is the things that people put in front of you are meant to conjure up emotions. So yes, in a weird way, this is the way you should act over this little chart to the left here, 5 years, 5 days. You should always have kind of a longer time frame. Incidentally, as it relates to economists, making forecasts, I'm not at the UCLA School of Business making their annual forecasts, or Michigan Ross School of Business, but I read those religiously. And I'll tell you this: some of these people, they make forecasts going out 2, 3, 4, 5 years. Now it's fine to look further out, but really a forecast isn't worth more than the paper it's written on, in my opinion, if it's looking more than 6 months out. There are so many intangibles, and we live in a day and age where things can change in an instant. There used to be a time where, an economic mind, a bright person, he or she had a little more insight than maybe Joe and Jane Sixpack. And same with your advisor. You could find out, I have a 5th grader that could get on the internet right now and find the earnings report for Microsoft today. That's not hard to find. So information is certainly not a scarcity. my argument is there's too much of it, and you get this type of stuff, massive headlines that really, really drive emotions, and that's where we're in a lot of trouble as consumers, business owners, and investors. You're going to be driven by emotion. So I promised I would, and also not talk politics, but it's really, really hard to ignore. We're 27, as of last night, I guess 26 days now away from an election. If you haven't heard that it's going to be the most consequential and important election of our lifetimes, you know, of course it is. I'd argue that they all are, but, you know, does the president matter? Let's take personalities and stuff out of it just for a second, but does the president and he or she's platform, does that matter? Does red or blue matter is what I'm getting at. I could pull up a couple slides that show a Democratic, you know, president is going to do better for the economy and the stock market than a Republican. I could pull up the opposite. It could quite be, you know, crafted each way I want. A lot of presidents and their administrations love to take credit for when things are humming along. And then they'll point out to the fact, and we saw it right here towards, you know, 2000s when Bush, okay, we opened up saying, look, we just got hit like this country's never been hit before. The dot-com bubble burst. Did they inherit some bad policies in the administration prior? Well, they would argue no. And then vice versa. Right now, you're going to see it. We came off a very steep recession in 2008. We actually had the most slow and anemic recovery in the history of our country. Yet to the average person, we saw 9 years, almost 10 of consistent growth leading into 2019, which was one of the best years on record. But where I'm going with that is each president is going to take credit for what they're doing and also probably deflect some of the blame for what they inherited. How does that actually pan out? What really matters in an election? Is it the president or is it other things? The president has something to do with that. I'd argue that in the first 2 years is where they make all their magic. And ideally, believe it or not, you want gridlock. You want gridlock in Congress, House, Senate divided. Those things actually are healthy for stock markets. Nowadays, it's maybe not healthy for our blood pressure because there's so much infighting and divisiveness and whatnot. And I'm not going to go there today, but I have to point out that, and here's a list, the slide prior showed every president since George Washington. This one only goes back to Hoover in the late 20s, the Depression. But this is the dirty little secret behind red or blue. Markets always go up over time. There's never been a 15-year rolling time period where we hadn't finished positive. So even if you got in, you're the dummy that got in at the very top of the market, you're going to be okay. History tells us that you'll be okay for 15 years. Never once in history. Only once, I believe, in a 10-year rolling time period has it been negative. Here's the point, though. If you're in the market, whether it's red or blue, Democrat or Republican, all election years average 11.29%. That's pretty positive. The bigger number to me is 82.6% chance of being positive. If you go to Vegas, you do not have these types of odds on being positive. You know, as bad as this year's been in the market, I'd argue that the perhaps worst stretch and worst market I've ever been through, and this is, you know, I've read all my history books and all this whatnot, but the worst was 2001 and 2 and 2000 itself. That's where you have a market that was down. You hang in there, you're a good soldier, you do your best to not panic. 2001 is down again, back-to-back years. That hardly ever happens. Okay, certainly if I stick around a third year, it's gonna be okay. Well, believe it or not, that was the only time in history where we had 3 negative years back to back to back. So there's always that what if that could happen, but this market, as painful as it's been, you know, there are some good things to talk about. And I do want to kind of roll into that. So if you're panicking about Biden winning or panicking about Trump remaining, I'm not going to water that down. We can always dig into that, and I can maybe give you my own little opinion without getting too opinionated on who I want. But the economy right now does still have some life in it in certain areas, and we're going to dig into each of those pieces. So real fast, this is kind of a funny chart. If you step back from it, all I see is a little histogram with 4 blue bars that aren't really that much different. What this shows me is, you know, on most years, it doesn't matter what the market did the year prior. You know, the market does not care that it's October 8th right now. It doesn't care that it's 2020 and all the jokes about 2020 being the worst ever. It does not care. It just looks today, wakes up in a good or a bad mood. It has no predictability. What happened yesterday has no predictability of what's going to happen tomorrow. Now, there can be a little hangover from some sort of, you know, event or, you know, economic number that comes out. But in general, ever since almost, you know, well, here it is, 1896, you got a high 60% chance of the market being positive every year, regardless of what it's done. And the bar chart to the right, even when we're frothy, when we're at peak levels, as we were earlier this year, you still have a chance of greater than 60% that the market will be up, even if it was up 20% the year prior. Now, that's kind of telling me it doesn't mean just be a permanent bull person where you're just always thinking it's going to go up, but it really has nothing to do with what happened yesterday. Markets change quickly and all the time. So I'm going to start digging into maybe a little bit more granular and Seal Beach and open up for questions too. But I find a little humor here. You know, what do you do as a person that's looking at this economy? I'm in a building here where it's 25% capacity right now. I'm not joking, but once a week I'll see someone with cardboard boxes moving their stuff out. They may not be going out of business, but they're going home. They're working out of the house. Life has changed quickly. You can't get a haircut or have a burger and a beer like you used to. Things are very different. So, you know, this little cartoon is telling, you know, the person here is being advised to go buy a sofa because there's going to be more, you know, coins in your couch cushions. But here's the story. I'm trying to point this out that we are right now seeing a massive inflection point on how business and the economy is going to change, if not already. Certain stocks have really shown us that. We are doing something that this chamber hasn't done. We've been on Zooms all year. We are doing things virtually like no one's ever thought of. Now, there are going to be some benefactors to that, and I'll touch on that a little bit. But, you know, it's pretty amazing that I can order something on Amazon right now, and by the end of this discussion, it may be at my doorstep. You couldn't do that a couple years ago. So as it relates to, you know, going from Wall Street to Main Street in Seal Beach or any town that you're in, you know, some people are literally out of business, having to kind of figure out a career change or literally pick up the pieces and figure out what am I going to do? And it really depends on the sector you're in. This has been the most unusual recession I've ever been in, studied. It's unfathomable how it's impacted people differently. If you're a mortgage broker right now, you're working 15, 16 hours a day. It's insane how much that's, you know, been almost a boom, and that's because of low interest rates, not because things are just great. So would you want to own a gym right now, a bar, a restaurant, a movie theater? Probably not. And that's right down here in the lower right corner where, you know, again, so many restaurants are going to be gone and obviously employment has just cratered. Speaking of employment numbers, and I'll touch on that a little bit if people have more detailed questions, but beware of watching some of these charts that show, you know what, we just had an amazing recovery with employment. Well, that's because, you know, half the country was, well, all of it was shut down for a bit. But when you lose a quarter of your workforce overnight, you know, that chart should be thrown out the window. That's not what happens in your typical recession. You know, this recession didn't just kind of roll over. It exploded and really crushed a lot of sectors, some for good. So we're going to see a shift, and I'm actually excited in certain areas here because if you're fairly awake and figuring things out here, there will be some opportunities, and some sectors will do better than others. So digging into one last slide here, here's a little kind of a busy chart of Orange County, and then in the upper left corner there's our beloved town, Seal Beach. What do they call it? Mayberry by the Sea. I believe that's what we used to say. You know, this is, and I can't, when I looked at this and it depicts each little city and area by the dominant industry that drives it, you know, some of them I'm thinking, gosh, you know, what is that factor? You know, I always think as a consumer, you think retail and so forth. Are we making things here as much? We're not a manufacturing town. You know, Boeing is here, but are they? So what is this town all about? And really it comes down to, and they put it red here as accommodation and food services. These have been just punched in the gut. And, you know, I'm really impressed with our own town as you know, if you haven't been down Main Street recently, it's amazing to see people, you know, really, here comes that pivot word, but really adapt to what's been a train wreck of an environment. And, you know, they've pushed out the parking spaces, and feels like you're in Europe on some nights if you're eating out. And, you know, we'll fight back, but that is a tough thing. And you cannot put lipstick on a pig. It is not a pretty environment, and it may be a rough recovery in some of these sectors, and certain towns will suffer more than others. So with that said, I wanted to be mindful of time. We still have several minutes for any questions, and I also wanted to share with you here's my email address. That's my direct line. Love to answer any questions if anyone has any. Not all at once. Incidentally, Rob and the Chamber, I do also want to say a big thank you, because this is one of those things where I do this every day, and in some formats I talk to people, but I love doing these types of things, and I'll obviously take them in many different routes, but thank you.
Well, we appreciate you putting this all together, Matt. Oh, somebody wrote in on the chat, what do you think about the housing market right now?
Great question. So, and we have a realtor. Rosie, you're on the line, right?
You do realize there's a pause because everyone has to figure out that they're muted, and then they have to figure out,
Yeah,
how was it that you unmute?
I'll make it interactive.
Yeah, I see Rosie's on here, but she's muted.
So I'm not a realtor, but I'll tell you, real estate is sort of like bonds. You can't just say it, oh, bonds are great, real estate's great, or the other way. What I see right now is obviously the three most important words with real estate are location, location, location. The reality is it's what type of real estate as well. So I'm starting to see a lot of pre-foreclosures. You see those numbers percolating, they're starting to happen. It's a weird time. It's a great time to buy a house. It's also a worse time to buy a house. You know, the other shoe may not have dropped yet. As it relates to commercial real estate, that's an area where I really think there's going to be some serious issues. This is pre-COVID. We saw some of that stuff just kind of poking its head out. You know, commercial buildings right now, again, people are moving out of this building, and I see it happening all the time. People are trying to renegotiate, you know, their leases and whatnot, and try to figure out different ways to work. And that might be a permanent factor. So that'll be certainly interesting. I do think that's one area that's not been tattered up yet, and the operative word is yet. I'm going to get out of my screen share so I can see you all. Any other questions, folks? I did it. I made everybody fall asleep.
No, we have one more question. What can small businesses do? Oh, the little flag went away. What can small businesses do to further pivot financially during this time?
Say that last part again, Rob. I'm sorry. Further pivot what?
What can small businesses do to further pivot financially during this time?
Wow, $1 million question. That might be a good lead into our Edge series, right? I mean, that's actually a layup there, because, you know, I'm mainly looking at markets and whatnot, but right now it's survival mode, right? I think some people that haven't, for example, taken care of their biggest fixed assets and things like financing, it's surprising. I was talking to someone, literally $5 million client that owns several businesses, and I just happened to ask him about his rate on one of them because he left my little questionnaire blank, and it was 5.5%. I just, to me, that's this is a bright person that just wasn't seeing something that was right in front of him. So I'm not sure that answers, I could really dig into a lot of different areas there, but I think there's some things in front of us that really are opportune. This chamber did a great job of educating people on some of the programs that were out there, whether it be some of the loans or some of the government help that was available and still will be, and there might be another round of this. So
Here's another one. You're not done yet, Matt.
all right, I'm
You're
here.
still on the grill
I'm
here.
buckled in.
How much? Oh God, this little flag thing goes away. How much do you recommend that businesses or organizations are frank about how desperate or down their businesses is to their customers?
Well, that's a great question because I think some of it has to do with perception. Who here has seen a furniture store that says going out of business, 30% off, 50% off, and you go in, I'm going to buy that, $3,000 that I did not necessarily need. And then 6 months later, you're driving by and that business is still open. And it doesn't say new ownership, right? So some of these, I'm not saying they're hoodwinking us as consumers by being forthright about, hey, we really need to clear inventory, or hey, this is a legitimate sale. I always kind of, I'm going to get hurt here by making fun of my wife, but whenever she tells me there's a sale at Nordstrom's and it's called the half yearly sale, I don't buy that because it seems like the half yearly sale is happening monthly. And, when they're handwriting you notes about sales, that's not half yearly. So I'll give you one local example though, that I thought was really powerful and kind of neat. And actually it happened twice. It happened a year before the pandemic. I want to say, what was the donut store on the donut shop where the husband, his wife was going through some health issues? Do y'all remember that?
Yep.
So that was nothing COVID related, nothing recession related. That was just, let's help someone out here that really is doing their best to stay open. As it relates to COVID, another donut shop, it sounds like I eat a lot of those, don't I? But donut place in, the name escapes me, it's in Los Al, right on Los Alamitos Boulevard. Can anyone help me out with that?
Is it Nevins?
Thank you. Yes. So I got word of this through one of our baseball friends that was saying, hey, they're struggling right now. They're up at 4 a.m. making donuts, but no one's there. And they may not make rent this month. This is long before the Fed started writing checks to everybody. So I went there just saying, I don't even eat donuts, but I'm going to go buy a bunch of donuts. What's a few bucks when you're trying to help someone that's fighting? And there was a line out the door, so by them being honest about, hey, we're on fumes here, I think that's good. Now, would I want my bank telling me that we are in serious trouble? Me, yes. But, I look at F&M, for example. They have this great reputation of being, kind of a neighborhood bank and sort of more conservative and fiscally kind of, concerned about not putting stuff out there and taking on every loan and all this. So they have a different message, and I think that's a good one. But I think that can go both ways.
Okay, we're not done here. One more. Oh, a lot of questions coming up. All right. One, do you think the feds will forgive all small business loans under 150, 50K? Have you heard anything one way or another?
That's been you talk about a COVID topic, that's been a moving goalpost. So I've heard that. I've also heard don't trust it. And that's a hard decision to make as a business owner. Do I sign this? Do I not? So I really can't give a definitive answer on that because what's the old saying? That's above my pay grade. But some have already been promised that be forgiven. Others that could still be.
And I have a question. I've seen obviously we've all seen that the federal government has pumped a absolute huge amount of money into the economy. Do you think that's going to cause an inflationary period?
without question. So here is some doom and gloom. You all know this. There is no such thing as a free lunch. And did we need to do it? Did we need to do it in 09? You know, you got some great arguments for plus yes or no. And this was unheard of. We needed to do something. But again, you know, right now, if anybody has scratch paper, just write out the number $3 trillion. Just tell me how many zeros there are. And most people cannot do it. That number is mind-boggling. Well, we were already in massive debt. We didn't need more, but you know what? This has never happened. We needed to do something. How it relates to the core of that question, what's next? You know what, folks? It's not going to be pretty. There will be inflation. It's without question. There is supposed to be inflation. You know, historically, inflation is supposed to be, you know, the happy number 2.5%. You know what? It's healthy to have some inflation. Certain sectors are going to get blasted, right? Inflation in some areas has really already shown how brutal it can be. College tuition's just out of control, but you can buy a big screen TV at Costco for, you know, a couple $100. So it's going to hit us differently. But I can assure you this: inflation is coming. The other thing I would argue, though, is does that mean it's not good sometimes? Okay, I'm not talking hyperinflation like Brazil or you know, Hungary, where you had, you know, you're literally standing in line to go buy milk or bread, and by the time you get to the door to pay for it at the counter, you know, it's 4 times the price it was. So, but inflation's coming, and it may not be in the 1980s where it was double digits. You know, a good mortgage was 14, 15%, but it's coming, and there will be some benefactors to that too. One thing is, we've owned gold this year. As I hate gold, not to have it as jewelry or whatnot, but you know, gold's an asset class that's going to benefit from things like the Fed printing trillions of dollars, fear, crisis mode, inflation on the horizon, if not already here, and a weak dollar. So things like that can actually help. And stock markets also don't necessarily go down with inflation. So just mind you, there are things that a lot of people say, well, when this happens, that happens. That's not always true in economics. You can connect dots as much as you want, but sometimes they don't just mean doom and gloom.
Okay, and then we have one last question here. Do you think that there'll be another round of economic stimulus checks again?
If you asked me that on Monday, I would have said no. Then I would say yes. Oh, I laugh about it, but I do. You know, I read an interesting article the other day, and I won't bore you guys on this, but I can share it with anyone who's curious to read more about that. But, you know, the argument of debt isn't bad, and it's kind of a mind pretzel twister, but we are in a different world right now. You know, I was raised by someone who was growing up towards the tail end of the Depression. My dad was a lot older than most parents in my age group. And so I learned some lessons there. But when I was telling him I was going to buy my first home with, you know, 10% down, he just about slapped me, right? You just don't do that. You know, in his world, you don't even do it with 20%. You know, you buy everything cash, right? But so different times and different ways to look at debt. But I can assure you that right now, regardless of which administration's in play, there's too many problems right now to be fixed. And I don't know if there's a magic answer for any of them, but the Fed has been writing checks, and they will continue to do so, in my opinion.
Okay. Well, that pretty much concludes the meeting. I did want to acknowledge we appreciate Kristen LaHage from Senator Feinstein's office for visiting us today. We appreciate that. And also Lauren, you're gonna have to forgive me, I'm terrible with names, by the way. Lauren Burrich from Congressman Rudas, and Tim Kelsey with the city too. We thank you all for joining us, and I thank everyone for coming, and look forward. I again want to encourage you to join us at our Ed series coming up. So local businesses, and they're going to be in different areas of like business sectors, and show how they responded to COVID and what they did to pivot to maybe help inspire all of you to help navigate these times. So thank you very much. And so I call this meeting adjourned. Thank you.